All right, time now for a business update, and I'm joined by Anke Uhle. Good morning, Anke.
Hi, Will.
Starting with the Trump administration, him outlining steep tariffs on steel and aluminum, and that has some people thinking there may be a trade war in the future.
Yeah, that sort of was a pretty drastic step, and the reason that Donald Trump gave for these tariffs is national security. Essentially, he's saying that in the case of war, the U.S. needs to be able to build military equipment using locally sourced steel and aluminum. International reaction has been swift and fierce, with several countries threatening their own punitive tariffs. U.S. Defense Secretary Jim Mattis is saying the duties should target certain countries only in order to prevent damaging relationships with allies. And the move could also hurt domestic industries, which rely on the metals for production. Alex Jennings has more.
U.S. President Donald Trump has made no secret of his America First policies. However, his latest announcement is one of the most drastic yet. A tariff placed on metals imported to the US, 25% onto the price of steel and 10% on aluminium. It's a win for American steel and aluminium companies who have long complained of unfair competition with overseas producers like China. They've lobbied for years for this kind of aggressive government action. But American industries that rely on steel and aluminium for their production could take a knock. The US is the world's largest importer of steel, and higher prices mean some of the nation's biggest industries, like the automobile, aerospace and construction sector, may have to shed jobs in order to make up for the tariffs. The move could lose more jobs than it creates. Steel-using industries employ 80 times as many people as steel-producing industries in the US. The price of things like cars and construction could also be bumped up. Outside the US, Trump's announcement has fueled fears of an all-out trade war. Canada, Mexico and the EU have already said they're considering retaliation by ordering tariffs on American goods, something that could bruise the USA's economy.
Canada would obviously take appropriate measure to defend the workers in the steel and aluminum industry, as well as to defend our industry. And what we need to remind ourselves is that the United States has, in fact, a trade surplus with Canada when it comes with steel, about $2 billion. That Canada buys more U.S. steel than any country in the world.
The new tariffs are set to go into effect next week, although the White House are yet to say how they plan to implement them.
And last day of the trading week, how have markets been reacting?
Well, after sell-offs in the U.S. and Asia, European markets opened in the red as investors were clearly spooked by the proposed tariffs from the U.S. president. Paris's CAC 40 down nearly 2% at open, Frankfurt's DAX down 1.25%, and London's FTSE down 0.5%. Germany's ThyssenKrupp steelmakers stock was down 1.6% at open, with German and French automakers also selling off. A similar picture in Asia, Tokyo's Nikkei shed 2.5%, and Seoul's Kospi down more than 1%. We're seeing major sell-offs in Japanese and Korean steel manufacturers. Chinese stocks were also down as China criticized a separate U.S. trade report that pledges to put more pressure on Beijing. Now for some other business news. Lawmakers in the U.S. state of Georgia are retaliating against Delta Airlines. They approved a bill to strip a $50 million tax break proposal on jet fuel for the company in response to Delta's announcement it would stop giving discounts to members of the National Rifle Association. Delta is one of the state's biggest employers. A victory for Uber in one of its largest markets. Brazil's lower house of Congress voted to approve lighter regulations on car-hailing apps, eliminating logistical and cost roadblocks like requiring taxi-style license plates. Uber has 20 million users and 500,000 drivers in Brazil. President Michel Temer can still veto the bill. The world's largest cement maker is resetting its strategy after turbulent years fueled by a scandal at its Syrian plant. Lafarge Holcim's CEO unveiled a new 5-year strategy, which will see the company grow faster than the overall market and cut costs. This after the group took a $4 billion impairment charge in the fourth quarter, pushing it to a net loss of more than $3 billion in 2017.
And finally, the embattled Weinstein Company has finally found a buyer after a long struggle to avoid bankruptcy.
Yeah, that's right, Will. So it seems like some poetic justice does exist in this story. After movie mogul Harvey Weinstein was taken down by sexual misconduct accusations from women in Hollywood, the production company he helped found will now be transformed into a female-led entertainment venture. The company reached a sale deal this week. The buyers are paying $220 million for assets and $225 million for the studio's debt. They're also going to establish a compensation fund of up to $90 million for Weinstein's accusers.
makes you look forward to supporting them and going to see whatever comes out in the theaters.
Yeah.
Anka Ula with a roundup of the business